This is Larry Tentarelli. I'm a full-time position trader and the editor and publisher of the Blue Chip Daily Trend Report. With a brief blog and video, we're going to take a look at a chart study on Netflix. Obviously, Netflix is in the news a lot today. So I sold this stock December 15th, 2021 on our members website at just over $5.85. And so far, we've avoided a 62% decline in the past 4 months. So our subscribers were alerted in real time. And what I want to do here is walk you through the process. We're going to take a look at the chart, and I'll share with you exactly what I saw on the chart to cut this position out of the account. So we'll start first with the alert to subscribers. December 15th on our members Twitter page, just after noon, I let members know that I closed the Netflix position. It was above the stop. So that was December 15th, just over $5.85 a share. And we'll start with the chart and the entry to give you an idea of how we got here. So Netflix was in a rising uptrend above a rising 50-day moving average. It had a series of higher highs, had a series of higher lows. It tested a new high here, and then it pulled back to the 50-day moving average. So what I wanted to do is see if Netflix would hold this 50-day, and then if it did, start my position. So on November 26th, I started my position, which is this black bar here at, looking at my notes, 665 and change. A little bit of a pullback that Monday. And then on Tuesday, the stock opened higher. Jerome Powell came out in the afternoon, and he came out with a more aggressive stance for the Federal Reserve in their hiking cycle. And what happened, we can see by looking at the chart, is Netflix it tested higher. It started to trade down right away. The next day, it lost the 50-day moving average. So we went from a quiet pullback in a longer-term uptrend, possibly testing a breakout, to now losing the 50-day moving average. Sharp pull down. Now it had a rally into the 50-day, and what I wanted to see is if Netflix could reclaim that 50-day moving average. It didn't. It failed, and it started to move lower. So now what we have is a lower high, a lower low, below the 50-day, and failed at the 50-day. So at this point, I knew that this position was on the wrong side. And even though the chart set up correctly, once the Federal Reserve changes gears, it can be difficult to fight that tide. So what happened from here is the stock started to trend lower. Federal Reserve had their meeting on December 15th, and I wasn't comfortable holding this position that had shifted gears quickly going into that FOMC meeting. So that's when I let subscribers know on December 15th that I closed out the position. Now, after that, the stock started to trade a little bit higher. There was no fear of missing out on my part whatsoever that I was missing anything. It made another lower high, started to trade lower, and then on December 6th, it lost the 200-day moving average. So a lot of bearish momentum here. Lower high, lower high, lower low, lower low, failed at the 50-day. The 50-day moving average started to roll over. Stock closed below the 200-day, and then it's been pretty much straight down since then. So since we've closed out this position at 585, stock is down around 220 and change today. So that's a 62% drawdown that we've avoided so far. There's been no trying to buy it on the way down, no trying to play for a bounce. Once they lose that 200-day and they get below the declining 50-day, then that's a very difficult place on the chart. Now, Wall Street came out today, and we can see on CNBC 9 analyst downgrades at Wall Street on Wall Street analysts after the stock is already down 60%. So our technical process that I just walked you through took us out of the stock 4 months ahead of major Wall Street brokerage firms across the board. So this is what I wanted to share on the Netflix chart, that what I do as a position trader is I always respect price. And even though I know I've got an uptrend and it gives me a very clean technical setup, when the Federal Reserve shifted gears and the market immediately started to sell a lot of these stay-at-home stocks, in internet stocks, I knew at this point that I was probably on the wrong side of that position. Also on my website, bluechipdaily.com. If you're interested in seeing more, if you go to our top performers tab, you can see some of our top market calls so far for 2022, including the pivot out of high growth stocks in December last year. Also, there were a lot of other high growth stocks that I sold, not just Netflix. So we sold out of a firm in the fourth quarter, Asana, which is down from $131 to $31. Facebook at $316, Roblox, and you can read through and you can see the actual real-time screenshots of when I close these positions and when I let our subscribers know. We closed C at 270 and change, and I think that's tested 100 to 110 recently. So Netflix wasn't the only stock that I closed out of in the fourth quarter and avoided some major drawdowns. Also, if you go onto the top performers page, you can see some of our other blogs and then stock by stock position ideas. I post a chart of the day for our members. Also, our premium Twitter page is part of the membership. If you go on to the Join Now tab, it will walk you through some of the member benefits. So every day I do a video after the markets close. We go over best ideas. We have a weekly top 25 stocks list, a high beta list for members that are looking for those high relative strength, quick moving breakout stocks. We've got a low volatility list, which is on the other side, which is much lower volatility ideas. So that's it for the video. I hope that this was very informative for you. Bluechipdaily.com is my website, and I hope to see you on our members page soon. Have a great day.